Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern U.S. time on Tuesday, the 25th of April, 2017. Thanks for joining me again for another Trader Bite. Hopefully, you're gaining something from these every day. We've been doing them for for about 3 years now, every day. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance currently is slightly bullish. We have the Russell leading the pack, up 12 points, 0.85%, followed by the mini Dow up 156 points. So it's more than slightly. Uh, it's definitely um, it's definitely bullish. The Euro Stoxx 50 up 0.54%, the Nasdaq up 0.38, the S&P up 0.36 or 8.5 points. So we have a gap up this morning, again following the big gap yesterday. We left the gap zone behind as expected, and the loser today, the laggard today, is the Japanese yen, followed by gold. Gold losing another $9.60. It has dropped now to $1,267.90 this morning. The U.S. dollar is teetering on unchanged. Crude oil is open now. The crude oil pit session is open, trading at 49.09. Crude oil, by the looks of it, looks like it has another small leg down, in my opinion, over the next day or so. Inventories tomorrow, that could change that, but overall, this is where we stand. The overnight session, the key news yesterday, the U.S. announced plans to retaliate to escalate a long-running dispute with Canada. Um, the Commerce Secretary said that they are announcing a 20% duty or tariff on Canadian softwood lumber imports as retaliation for, I forget what commodity that the Canadians are charging tariffs on. So we got what kicks off the North American trade wars here. Not a good sign. The euro is holding tight to its winnings from yesterday, still trading at $1.09 and $1.09 right now, up 0.22%. And then other than that, we just got a slew of earnings this morning. We got Biogen, Caterpillar, we got Coca-Cola, we got McDonald's, 3M, just a whole bunch there. I suggest you find a good earnings calendar and kind of pay attention to that. Earnings do drive our markets, especially if you're trading the indices. Other than that, looking at what's on deck, remember today is fairly light on the calendar. Tomorrow there's nothing. This morning we got Case Shiller this morning. Let's see what we got there. Actually, it doesn't matter. We're looking for new home sales at 10 o'clock Eastern. That's a half hour after the open. The expectation for March is 584. Richmond Fed comes out at the same time, looking for 16. Also at 10 o'clock, Consumer Confidence Index looking for 123. The prior is 125.6. And then, of course, after the close, we get the API crude inventories, which gives us a sneak peek into tomorrow's DOE inventories. That comes out of 4:30 Eastern for last week. Let's switch gears and look at what we expected yesterday. Here's the expectation yesterday. Expected the market to go sideways for some time. Expected an open auction out of range, which is exactly what we got. Again, the purpose here is not to be right. The purpose here is just to have a plan and to have a way of trading that plan, of stalking trades in that plan. So we went sideways. We're looking for sideways. And then we were looking for a drop early, responsive. As long as it stays sideways, you get the weaker hands getting nervous and wanting to close their position for a profit, those who are long. And we would look for responsive selling, which then is confronted by some initiative buying, and then I'm looking for the market to fall back into range. So This is pretty much exactly what we want. This looks like the Mason symbol over here, the one. I got a triangle instead of a circle in case you're wondering what happened here. But overall, we're looking for a drop early after sideways action. We're looking for a push, the major move of the day being a push up, and then looking for it to drop back down. Here's what actually happened. Here we go. So we got sideways, a lot of sideways. So approximately an hour and a half of sideways. Then we break the opening, we break the initial balance low and extend the range lower. And then we're confronted by this buying. So we break the initial balance high. So now we're neutral. And then we finished in the middle. So it's almost exactly as shown. The problem with this the um, versus the hypo is that I was really looking for it to drop into somewhere around the 62 and go up as high as around 78, 80. That did not happen. Let's look at that again. So I was looking for, here you go, looking for a drop. 67 actually, and then a push up to around 80, 78, 80. But hypo one was almost completely in line. Hypo 2 was looking for a push early and an aggressive selling that ultimately leaves us with a gap zone, as you can see in this box here, but much more aggressive selling later on. It just could not muster that up. The overall volume yesterday, I checked it. I checked it sometime. I think it was 210 minutes in, and it was completely in line with what's expected. Um, so I know someone's saying that the volume was way off, but it really wasn't. Here we go. So here's the here's the range. This is a daily bar chart, day session only, RTH only. Okay, so this is for every bar, it's one pit session. You could see the range was really terrible yesterday, 8.25 points, but the volume was in line. This is what we would call the most common. That's the point of control of volume. Let's bring up the stat box here. Volume 1.05 million for the day session, as it shows right there. That's the mode or the point of control, and we were just above it. Not much different than the prior few days. So volume was actually in line. The range was terrible. The range, as you see, is collapsing, and it's also collapsing the VIX with it. If we look at the VIX real quick, yesterday was one of the biggest percentage drops in the VIX in recent history. So overall, the market just collapsed on itself yesterday, and it remains so. So here it is. Let's see. There's a just one second. I'm going to pull up the stat posted by Ryan Dietrich, a CMT. A CMT since 1990, today was the fourth largest one-day drop ever for the VIX. It dropped 25.9% and largest since after the U.S. debt downgrade in August 2011. This was the fourth largest VIX drop since 1990. Big thing to contend with here. For it's a good thing for premium sellers, that's for sure. So that's where we ended up yesterday. Let's take a look at the overnight. The overnight, not much action. You could see that we did rally up a little bit. Most of the overnight session was to the buy side. We basically opened where we closed, tested downwards a little bit, down to 68.25, and have been trading across the entire range. You can see that the profile shows no consensus whatsoever, and it's in a it's in its near its highs. It's off by about a point right now, and continues to push higher into the open. Also, the delta on the VIX for the overnight session is fairly strong. We don't normally see a delta this strong in the overnight session. The overall inventory is long. Is long. The overnight inventory is long coming into the session, but the profile is showing no consensus on value. There's a little bit of a break here in the middle, but overall the market's moving away from it, and it's not giving us much to go with into the open, except to say caution shorts on the open. So what have we done over the last couple days? So when I squish this here, you can see that there's a lot of consolidation that occurred below, and I talked about the fact that it is looking like it's geared up to go higher. It has gone higher. We've had a gap, and then we've left the gap zone behind. So this morning, for those people who get flex levels, you'll see a gap zone showing up right in here. And then we're looking at another gap. This morning's gap is expected to be responsive though, so look out for that. What am I expecting for this morning? Given um, the situation that we're in, the high of yesterday was below the high from the 5th of April. So we've had this gap up run, an M shape, and a huge sell-off from the 75 the last time we came here. Yesterday we got to 74 and we sold off a little bit, and now we're gapping above. To me, it looks like it's probably got a little bit of support at 75, but overall looking for responsive selling into yesterday's range. So this morning coming in, looking for an open auction. Given the stance of the overnight session, looking for a test higher, and then I'm looking for responsive selling into the 74, 72 area, and then I'm looking for it to bounce back up and hold into Wednesday's session. Remember, Tuesday's sessions generally have the widest range, the highest volatility of the week, Mondays being the worst. And so today I'm expecting a little bit of range expansion above and beyond the 8.25 we had yesterday. So I'm looking for about 10 to 12 points of range. So 2370 is looking very possible down here at 2370, and that'll be hypo one. So hypo one is looking for an open auction, a quick test above or higher that gets sold. I expect sellers to step back in at 2380, and then I'm looking for responsive selling down into 74 and then 72 before the bounce back up. That's the key. That's the key play for today. If we get responsive selling immediately on the open, look for a base, and then the expectation is it's likely to cut through yesterday's range and may come out the other side here into the gap zone. So that's hypo 2 without testing above. So I'm looking for strong responsive sellers to step back in, balance overnight inventory early, and then push back into yesterday's range. Yesterday's profile is completely balanced, and the point of control is in line. You notice the point of control here from the 5th and the point of control from yesterday are in line with each other. The market is seeing value in these prices. I expect the market to fall back in here into the range and then finish in the range, as opposed to hypo 1 where it tests the top of the range and bounces back off of it, kind of like an asteroid or something bouncing off of the atmosphere of the Earth, you know. So that's what I'm looking for on hypo 2. I can go into hypo 3, 4, and 5 because we're off balance here, and they will have an effect. But I'll let you come up with those and figure out what you want to do as far as initiating. Now remember, it's great to have a plan. The moment of truth is executing in the market. I'm using order flow to do that. Always look for areas to lean on or lean against, and I've got several videos that show how to do that. And I'm using the S5 book map heat map to see what the market participants are doing at various prices. And once I see that the market's holding a certain area, then I look at the order flow and see if it supports going in the other direction. with a defined risk. I look for a small area to risk, and I always go back to my hypos and my main plan to see what the bias should be. So once I figure out the bias, it eliminates the noise, which is where most of the errors occur, right? Most people just commit all these errors because they don't know what's noise, what's trend, and they end up over trading and getting themselves into a bind and having to work themselves out of a bad position or a down day. Don't do that. Just hold on to your overall plan, wait for the market to confirm, be patient. You know, the hardest thing to do about trading, in my experience, and I've said this to my prop traders a whole lot, the hardest thing to learn about trading is just to wait. Okay? Good luck today, and I'll catch you tomorrow. Take care.